Alright traders, welcome to my channel. This is CJ Profit FX. Uh, Thank you coming back to my channel. Today I want us to discuss on top-down analysis. I know some traders have been finding so difficult to analyze their market or breaking down the chart to know what the market is telling you. As a trader, it's very, very important you break down the charts to know how the buyers and the sellers have been reacting in the market. And this is a very important topic that all traders need to get familiar with. Okay, follow me bit by bit as I take you in on how to break down analysis using multi time frames. Okay, so by now I know you know the types of time frame we have. We have the higher time frame, the medium time frame, and the low time frame. Okay, all these time frames depend on the type of trader you are, where we have the swing traders, the day traders, and the scalpers. Okay, but today I want to break it down. It will help you to know the kind of trader you are and the time frame that suit for your trading journey. Okay, in a high time frame, we call them a directional bias. This is a directional bias whereby traders need to know where the market is heading to. As a trader, you don't just rush into the market, start making a decision, or else you don't know where the market is heading to. You don't even know who is dominating the market, whether it's the bulls or the bears. So at this time, you should know that the higher time frame has to do with weekly time frame, monthly time frame, daily time frame, 4 hours. All these are higher time frame that helps you to know the direction of the market. Okay, so and we have the medium time frame. Medium time frame is now bringing the time frame down to maybe 4 hours, 1 hour, 2 hours, 3 hours to know how traders have been reacting or how the buyers and the sellers have been reacting in the past 4 hours, 2 hours, 3 hours, or 1 hour. So we call them setup information. This is a phase whereby every trader is expected to start looking for the setup. In fact, the setup in the market have given them information on what to do and what not to do. Because you notice some of you as scalpers, you start looking for a high time frame to make a decision, you might fail, stop loss and you can be your stop loss will be much. Whereas you'll be exposing your money to the market, which is very, very bad as a trader. So we have the low time frame. The low time frame is now maybe 30 minutes, 5 minutes, 15 minutes, 3 minutes, 2 minutes from 1 minute time frame. So these are low time frame whereby entry models are being spotted out. So for you to understand all these things, it will help you position well and know how to risk your money to the market. It can help you maintain a good risk to reward ratio, and also it can help you maintain a good risk management. Okay, so the first one we have as the directional bias. I told you guys that directional bias tells you the structure of the market, where the market is heading to, while the medium time frame tell you the setup formation. It tell you how to start and how to position yourself in the trade and how to get your entry model and also how to target your TP. Low time frame tells you your entry model. So without wasting much of our time, I want us to go to the chart to illustrate this and know if it is helpful. Please, if this is your first time coming to my channel, please do well to give me a follow, subscribe, share this video to your friends and family, and also turn on notification bell so you can be getting videos like me, like this anytime I drop it. Okay, okay, this is near USDT. I think we'll be going to a low time frame like weekly time frame. Now let's know if we can get the structure in a weekly time frame. Here in weekly time frame, we have the market in this form, where we have a push up like this, the market pulled back, which is the correction, and we have another impulse in the market and another pullback. So what do we have to do? We have to know where the market is sitting. At this point, we need to get the market at a demand zone. where traders are making the minds to buy, because at this peak I think the market will boom to the upside. So all you need to do is just to spot your demand zone. So with this we can spot this area, sorry guys, we can take this area as our demand zone. If you check, this is another block, we have another block here. So as we have the market in a demand zone, so this is a structural bias or a directional bias. At this point, we've noticed that for the past how many weeks the market have been ranging. At this point, the market have been ranging. So since the market is ranging, it left us now to break this analysis into a smaller time frame to know how we can go into the market. Do you see it, guys? This area the market is ranging. So what do? We go to a day time frame. Get to a day time frame. In a day time frame, we notice the market is an uptrend. From this spot, the market start moving to the upside, an uptrend. So since we have this, we're gonna break the market into a smaller pieces again. But before then, let's get the swing high and the swing low of this structure. This is the swing low, the lowest point. Remember the structure we got on a weekly time frame where the market is telling us that we should buy because it's sitting at a demand zone. So every decision we'll be making now is a buy decision. So let's get our swing high. This is our swing high. Think I have the opportunity to remove this now. So we spotted our swing high and our swing low. So what next do we need to do? Since the market is an uptrend, let's switch to 4 hours time frame to know how we can get entry, or how we can get what's the second phase, setup formation. Now at this point, we are now targeting this area. This is the main focus, the swing high and the swing low, the swing high and the swing low. So at this point, let's check the market direction. From here we have an uptrend. We have an uptrend. And how do we illustrate the uptrend? Let's get our break of structures to know how we can make a further decision in the market. This point we have our change of character here. We have our break of structure here. We have another small break of structures here. Break of structure. The market created this area as a swing high in 4 hours time frame. On our swing high, we have this man where the market mitigated, and then some traders took a short position from here. So what are we expecting from this market? At this spot, we have change of character, internal change of character, and the market mitigated this demand zone. So what do we do here? In this small structure, Remember, this is our double top. We have a double top here. So since we have this particular structure, it seems that the market is in a downtrend in this particular area. But at this point, the market have given us a change of character, which indicates market have changed e direction. So for our change of character, remember the strategy I taught you guys before. Anytime we have any change of character or break of structure, what we're expecting is to get entry at the origin that caused the break of structure or change of character. Then somebody might ask you, what's the origin? Let's target this area as the origin. So let's switch to 2 hours. So for now, this is where we'll be focusing throughout this as our first change of character. So from here, we'll be making a decision from here. So what are we expecting from the market? We're expecting the market to come and react at this zone and ascend. So let's go to 1 hour to know what is happening around here. If we're gonna sell from here, but if you watch the market direction, we are not expecting any sell for now because at this point the market is very bullish. The market is certainly bullish. So what we should do is just to go and look for a bigger picture that will give us a sell direction. If you are to sell, we'll have an LVG here. Have an LVG and I have a little order block. So these are the two areas we are targeting at this point. So the market might likely go first and mitigate this area, then we'll see a push down to this area. Remember, in a hard time frame like 1 hour, sorry, like a day time frame, the market gave us this area as a demand zone in a bigger picture. So what we are looking for now is an area to sell, a convenience area to sell, sorry, to buy. So that's why we are now looking for a breakdown of this of this particular structure to know how we can get a good buy and sell position. So first of all, we're gonna sell from here first. A stop loss here. We target here. Then once the market hits our TP, we can make a further decision around here to buy the market. So this is how to break down your analysis into a smaller form until you get a good entering model. So if you switch this to 15 minutes, you can get a good entering bias. So let's say for instance we want to buy or sell around here. I want to make decision around here at this moment. So what we should do then is to go to 1 hour time frame. In 1 hour time frame, let's check the structure. In 1 hour, for chart pattern traders, we can have something like this. We have a breakout. Okay, let's just conclude this tutorial with SMC. Let's go to 30 minutes. Okay, what we have here, we have change of character here. After this double bottom, we have change of character here. So for we to encounter this ranging at this spot, something happened. So we're gonna be expecting the market to come and react here as so buy. So but before then, let's go to 15 minutes time frame. Okay, here in 15 minutes time frame, we'll have another break of structure. And we have a good order block here. We have two other blocks, but we're gonna maintain this other block. We have an inducement. So in 15 minutes time frame, we'll be buying the market from here. Sorry. Our SL, then our TP. So we have might have this target. So this is the simplest way to break down analysis and then wait patiently as the market reacts in your POI. So some of you might be like, how is it important to break down analysis like this? And the answer is, if you don't break your analysis like this, you can never see what you are looking out for in the market. You will only end up exposing your money to the market, which is very, very bad. As a trader, you should expect a high profit and a smaller losses. Don't expose your money to the market, because what's gonna save you in this journey is your risk management. Okay, always apply a good risk management and you see yourself growing in the financial industry. So please turn on your notification button and subscribe so that you'll be getting videos from me. If you have any question, you can do well to comment. Once I check the comment section, I will attend to you. Thank you guys. One love.